It is Tuesday, the 24th of December 2012, or Christmas Eve for those of us who are practicing Christians. So I just wanted to share quickly this blog that I felt was very relevant to trading and life, really, before I move on to the daily review. Basically, this guy was born in China. He's a 31-year-old entrepreneur living in Austin, Texas, in the United States. And I found this video on YouTube because his videos have gone viral. Now, he's afraid, like most of us, he's afraid of rejection. That's one of the reasons why I'm even putting this video, or one of the reasons why I put the first video up a couple days ago on YouTube, was because I, like many others, am afraid of rejection. So to combat his rejection, his fear of rejection rather, he decided to do 100 days of rejection therapy. He's on about day 31 now, and some of them are hilarious, and some are quite touching, such as this one. You can have a look yourself. I'll put the link in the description of this video for his blog, but basically this one's probably the best one that I've watched so far. I've only watched 6 or 7 of them. He's currently on day 31 or 32 of 100 days, so very interesting, very applicable to, he puts what he learns from each experience. So at the bottom he usually writes a little section learning and what he learned from that particular experience and the way we interact as human beings. And basically, if you get a no, it's not the end of the world, in short. So that said, let's move on to the review. There's only 2 trades to talk about. This was Friday, and I mentioned that the measured move, and you can go back and look at Friday's video if you're interested. Basically, I was long from here and I got out near the end of the session. It put in another momentum, well, no, it switched to a 2-minute chart, but in any case, it put in another momentum reversal here, busted through, and it looked like it was going to gap up and come back to fill the gap here and move up, or else gap down, which is what happened Sunday evening here in Europe, and then come up to test and fall away. But instead of falling away, it formed another momentum reversal here at this prior zone of action. So you could have taken a long here, and if you did, it would have been very much rewarded. But because of the gap down and the retest to this momentum reversal here, I passed on that one, unfortunately, and that's what happened. So I got up this morning. Wasn't planning to trade a lot anyway, light trading. While the volume's light, I'm going to be lowering my trading volume, and saw this here, which I didn't catch, went for almost 10 pips, and eventually got this one here at around 213. Did its thing, put in a new momentum reversal, which would normally mean I'd break even my stop at that point, but I was out hanging some clothes outside, so I missed that. Took a full stop, waited, couple hours passed, 2.5 hours, and then got one here. You can see slower pace here. Actually, let me pause the video and I get the drawing tool up to draw this in. Okay, back. Let's see if I can get this thing to work. Okay, let's draw it in. Just let me test it here. Basically, you got one move here. This is not a really great color to do it in, but let's change to red. One move there, which is slower pace, and then this move is slower, even slower pace. While the upside, this is really not helping, but basically you got this situation here. Hold on, let me figure out how to do this. Draw No, it's not that one. It's not that one. Okay, forget it. Basically, you got this pace is like this, and then this one is slower pace, meaning a smaller change in price over a longer period of time. Hence, it's smoothing out. And then this one even more so. The opposite is true on the upside. So you've got lower pace here, and then sharper pace to the upside here. And so I bought right there, just after 6:30 Central European time, because there's a tiny 15-second momentum reversal there. It's just a way, it's not that the momentum reversal is the be-all and end-all, but it's my way to get into the market, and I stick to it and work around that methodology. So I got in there, waited, it popped, went a good 12 pips in favor, I think that is. 78, where did I get in there? 70, let's get in a bit more. I got in 77.5 and it got up to 88.5, so 11 pips. And then fell straight back off, and that really shook me, because the spread opened up. What would normally be a half pip spread became 2 pips, or at one stage even 3 pips. But it was kind of hanging around the 2 pip mark, and I just said to hell with it, and I got out there, and that's the second and last trade of the day. My target was the whole number here, at which point I would have trailed to 85, but instead I just got out at 85 once it came back up and put in the second wick against that reversal here, and that was it really. So I would expect, if I'm doing the prediction game, I'd expect a gap up to some form of gap anyway after the Christmas period. If the markets open back up on Boxing Day, I'm not sure when they do, but whenever they do, I expect a gap. If I get a gap up and it comes back down, I'll be looking for a long here around 90. If we get a gap down, then I'll be looking for a short at around 90. More so, I'd favour the long over the short, really, but it depends how it plays out. So that's it for now.